All right, hi everyone. Welcome to today's webinar session entitled Trading Strategy Clinic. So this webinar series is brought to you by IronFX. Before we start, do take note of the risk warning that comes with trading CFDs. Right, they are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. And also do take note of the disclaimer that the information in this webinar should not be considered investment advice or an investment recommendation, but instead is purely educational material only. Sorry, just sorting out a few things. Just let me make sure everything's all uh, all good to go here. All right, okay. So my name is Ketan Ramachandra. I'm a investment analyst here at Everest Fortune Group. So this webinar series is brought to you in a special partnership together with IronFX and Everest Fortune Group, where Everest Fortune Group has been the finalist for Best FX and Equity Research for the following years, right? 2019, 2020, and 2021. All right. So since today is a trading strategy clinic, we'll just start things off with by looking at what are the key economic events coming up for the rest of this week. Right. Starting off tonight in the US, we have employment data from the ADP, as well as unemployment claims as well from the Bureau of Labor Statistics. And then we have ISM Services PMI report due out later today as well. And of course, the big event next week will be, sorry, not next week, but tomorrow evening will be the non-farm payrolls, right, or NFPs, released by the Bureau of Labor Statistics. All right, do take note of these events and dates and times because they'll be market moving events. All right, so let's just switch over into Forex Factory. Right, okay, so here I am on Forex Factory. Just want to make sure you guys, if you can see and hear me well, please do let me know and do drop your do drop your questions in the chat box as well. Yes. Okay, so here I am on Forex Factory. Right, so I'm on GMT time. Okay, here I am on GMT time. And we're going to look at what are the key economic events coming up this week, as we've highlighted earlier on the slides, but just to run through it with you. Right, okay. So I've highlighted or selected just the two most high impact events that are coming up, because otherwise there's simply just too much or too many other data points which may not be relevant to what we are trading or may not have that impact that we are looking for. All right, so as you can see, we had Australia trade balance data out earlier today. And this we have OPEC meetings going on as well. It's the second day of the OPEC seminar that is going on in Vienna, Austria. The meetings will be coming to a conclusion by the end of today. And of course, later 12:15 p.m. GMT, we have the ADP releasing their non-farm employment report, followed by the Bureau of Labor Statistics with their unemployment claims. And of course, yes, we also have JOLTS jobs data as well. Job opening, sorry. This is released by the Bureau of Labor Statistics as well. Okay, right. And lastly, we have the ISM Services PMI report out as well, which will give us an indication or provide insight into the state of the service sector in the US, right? As we can see here, if we click on the latest results, okay, naturally, this is going to give us the previous month's reading. So you can go here, you can click on view on charts. You can see that the services sector, okay, first of all, do take note that a reading above 50 means that the sector is expanding, and a reading below 50 means that this sector is contracting, right? Let's just zoom in a little bit. So you can see ISM services or services sector contracted briefly towards the end of last year, but it rebounded very strongly at the start of the year. And although it still continues to expand, we can see that the rate of change or the rate of expansion is starting to slow, right? It is still expanding, but as we can see in the last 3 months, it has been expanding at a much slower rate. What's also sort of important is to look at the prices index as well. So as you can see, the prices index in this sector sort of peaked in the middle of 2022 and has been trending lower. Although prices are still expanding, do take note that a reading above 50 means that this particular index or sub-index rather is still expanding. But the good thing is it is expanding at a slower rate. Now, similarly, if you were to look at the similar chart for the manufacturing index, manufacturing PMI data, this is the latest one for the month of June. This was released earlier this week. We can see the manufacturing sector has been in contraction for the past 8 months, right? And we can also see that the prices sub-index peaked in the middle of 2022 as well, and has pulled back pretty sharply, right? We can see towards the end of last year, it has gone into contraction, right? That means prices are dropping very rapidly, and even at the start of this year, first couple of months, it was still in a contraction territory before briefly popping above 50 a couple of times this year. So overall, the prices, inflationary pressures in the manufacturing sector have been uh, retreating very, very sharply here. And that's good for overall inflation as well. But however, do take note that inflationary pressures in the services sector still remain relatively high. All right. Okay. And then, of course, we have unemployment claims coming in as well. So if we see uh, unemployment claims coming in higher than the forecast, that would mean that more people are applying for unemployment benefits. So that means this is negative for the US dollar, because that would mean that the labor market is starting to show some signs of cracks or show some signs of cracking. So that would mean the Fed doesn't need to be as aggressive with regards to monetary policy. Okay, so this is how we can interpret the data. But if the data comes in much lower or lower than the forecast, that means there's less people applying for such claims, and that means the Fed can continue to keep rates elevated. So this would be so a result like that would provide a positive catalyst for the US dollar. So hence dollar index will rise, gold prices will fall, and of course naturally all the other pairs, uh, uh, all the other currencies that are paired with the US dollar will react accordingly as well. All right. So just to take note of the key data that is coming up today. All right. Okay. So with that, let's just move on to trading view, and we'll start our analysis with the dollar index. Let's just go on with the daily. We'll start with the daily time frame. All right. So here I am on the dollar index chart. I'm on a daily time frame. So as you can see, for most parts of this year, you can see the dollar index retreating sharply towards in the last quarter of last year and finally bottoming in early February. And then you could say it's sort of been trading in a sideways fashion, right? It's been trading between 100 and 105 over the last 6 months or so, right? So it's not been fully testing the range, but it is close enough. It's pretty good, right? So we can see the dollar index rising sharply all the way till mid-March, going as high as 105, and then pulling back down again, coming towards 100 back in the middle of April, and then rising pretty strongly in the first half of May as well, going as high as 104.50 before pulling back in June, towards the end of June. And now we're starting to see dollar strength starting to creep back in again, right? So this is the daily chart, so we can get a good idea of where the dollar index is trading, right? Okay, so now let's just zoom in into the okay, before we zoom in into the 4 hour time frame, we can also see a nice ascending trend line as well. Price has bounced off this level a few times since the end of June. All right, so we can see we have a nice trend line as well, and we have also identified the various support and resistance levels and areas. Okay, let's zoom in onto the 4 hour time frame and try and see how did we establish these levels. Right. Okay. First off, we can see the ascending trend line here. Price has bounced off very nicely. Okay. In terms of, okay, let's look at the first resistance because price has reacted off it last night. So we can see this first resistance here is found by using a nice overlap. We can see price reacting off this level at 103.43 a few times, right? You can see this nice V-shaped bounce here back in early June. Then we can see price finding some sort of support here, although it did break well below, but it did offer some sort of support. But what is important is it is actually now acting at as a very significant resistance level. We can see price staying under 103.43 back in the middle of June. And just last week as well, at the end of June, price broke slightly above, but it retreated pretty sharply. And then similarly, again, yesterday, overnight, when we had the hawkish minutes from June's FOMC meeting being released, we saw quite a few hawkish statements and outlook by the Fed Chairman Jerome Powell, and his other committee members. So we can see dollar index rising into that very strongly. But today, we can see that this rise in the dollar index was relatively short-lived, and we saw a lot of selling pressures coming in. Right, this could be a case, probably be a case of some profit taking as well. As you can see, this area uh, has acted as a significant resistance level in recent times. Similarly, we can see price falling back down here for the dollar index down to this trend line. Will this hold? Well, let's see. Well, it depends, right? On the data, on the upcoming data, right? So that means for dollar index to bounce off this level, that would mean we would need to see a very strong ADP number, or at least a number that is higher than the forecast. We should also be seeing unemployment claims coming in lower than the forecast. So when you have these two conditions met, it's very likely we could see a potential reversal in the dollar index, right? So do take note of the economic events that will provide fundamental catalysts for the dollar to reverse. Now, obviously, the opposite will happen should the labor market numbers be softer than expected. So in this case, if the unemployment change number is lower than the forecast and the unemployment claims number is higher than the forecast, this would be negative for the US dollar. So thus, we are likely to see it break below this ascending trend line, right? So do take note of that. Okay, we've also done a Fibonacci projection here from this swing low on 27th of June, going to this high, swing high on 30th of June, and then ending back on 3rd of July. So it has helped us to identify the 61.8% Fibonacci projection level, which also lines up pretty well on slightly above the uh, overlap here at 103.43. So this is our first resistance zone. Now for the second resistance zone, it's found simply by using a Fibonacci retracement from the swing high on 5th of June, going all the way down to the swing low on 22nd of June. Right. So by using the swing low, okay, let's just pull up all the fibs to get an idea of what we're looking at. So we can see that as price made this bottom here, the swing low and started rebounding higher, it started going through all the initial retracement levels. So that as price moves above these retracement levels, they become invalid. So that is why we have not uh, kept them on the chart. And we can see it first ran into resistance at the or it ran into resistance uh, just under the 38.2% Fibonacci retracement. Then the second time it ran into resistance close to the 50% retracement level. And finally, after breaking through the 50, it ran into resistance at the 61% as well. And again, it has bounced off again. But because price has actually moved through this level and retrace and pull back, we can argue that 61 is no longer valid as well. But since price hasn't closed above it, right? I think we can just still keep it on to give us an idea of where the 61% is. So we'll just keep 61 and 78%. And obviously we can see 78%, 78.6% line up here with a pretty decent overlap, right? We can see a nice V-shaped bounce in price on 6th of June and then again on 7th of June as well. So this level, and if I were to extend it all the way as well, if I were to extend it all the way to here, you could say that yes, price has bounced off this level a few times, right? So 103.87 is our second resistance level. Now to the downside, in addition to the rising trend line, ascending trend line, we also have the first support at 102.75. Now, how did we identify this level? Right, if we zoom out a little bit, we can see the dollar index running into resistance at 102.75 a couple of times in the past. We saw this on 10th of April, then again on the 15th of May. Price finally broke through it on 17th of May, and then this would act as a potential support area should price start to retrace back. And as we can see here on the 14th of June, price did find support here. Yes, of course, we can see the wick breaking slightly below the level, but it didn't follow through, right? There was no confirmation of a breakout, and instead price reversed pretty strongly, and we can see a nice V-shaped bounce before, of course, price finally breaking through a few days later. Our yeah, yeah, a couple of days later. And then after that, once price broke above this level again, we can see that from 29th of June till 3rd of July, price has bounced off this level about 3 times and has gone to make and it has continued to climb higher, right? So that is how we have identified the second support. And for the first first support, that's how we identified the first support. Now for the second support, how do we do it? Uh, we can probably, okay, there's a few things you can do. You can probably use this swing low as well because we don't really see any other decent overlaps. This is not really a big level. This is probably a decent level because you can see a nice V-shaped bounce here. So probably if you were to zoom in a bit, I would probably not keep it at the wick, but probably, oops, just keep it at the body of the candle here. You can see a decent overlap here as well, over 3 or 4 candles. Right. Okay. So this is how we have identified the resistance levels for the dollar index using a combination of trend lines, overlap supports, overlap resistance levels, Fibonacci retracement levels, as well as Fibonacci projection levels in addition. Right. Now, dollar index does seem to be selling off pretty strongly now, and it is testing this ascending trend line. We could see, like I said, we have ADP non-farm payrolls, unemployment claims at 12:30 p.m. and also ISM services data and JOLTS job opening data at 2 p.m. GMT, all of which are major catalysts for the direction of the dollar index. Right. So naturally, if the dollar index is falling sharply, we can expect the euro to be climbing, and we can expect cable to be climbing as well. So let's look into these two uh, forex pairs. Right. So as the dollar index is falling, we can see the euro USD bouncing higher, right? So we can see today, let's see if we go on a 1 hour chart. Okay, yes. Right. So it was a bit not choppy, but yeah, you could see price finding support at 108.50 and pulling back again, sort of acting as a pullback support before bouncing higher, right? So we can see that clearly on the 1 hour chart. And on the 4 hour chart, we can see that yesterday, as we had hawkish minutes being released in the US overnight, we saw strong demand for the US dollar, which would mean euro dollar was falling, and it fell through this ascending trend line, right? And then now it is coming back up again as well. So this trend line is no longer valid, but we just keep it on here just to highlight the fact that we had a pretty decent ascending trend line. You could say this is almost like a symmetrical triangle in terms of chart patterns. And then it broke out briefly last night, and it found price found support at 108.50, roughly around there, yeah, 108.40, before reversing to climb higher. All right. So okay, in terms of first support, this first support was found by using, if we zoom out, by seeing multiple instances where price has bounced off this level, be it as a resistance or support. So we can see on 10th of April, a nice V-shaped bounce in price, dollar index, the euro bouncing off 1.0840. And then again on 12th of May, as price was pulling back pretty sharply, we saw another nice V-shaped bounce as well, price finding support. And then on 23rd of June again, another nice V-shaped bounce. 30th of June, yes, price broke below, the candles did close below before rebounding higher, and then similarly last night as well, or yesterday. Right, so we can see that we have multiple instances where price has reacted of this level, and that is why we have chosen this as our first support. Okay, with regards to the second support, we've done the Fibonacci retracement from the swing low here on 31st of May, going to the swing high on 22nd of June. And okay, let's just pull up all the fibs to see, get an idea of what it looks like. So as you can see, none of the Fibonacci retracement levels really line up well with any of the overlaps, apart from the 61.8%, right? So that is why we've only kept 61.8%. And of course, because as price has made the swing high, it starts dropping, breaking below these retracement levels, 23 and 38 become invalid. 50, you could argue, maybe is still offering some sort of support, right? If I were to just draw a support line here, where is it? Where's my... Ah, there it is. Sorry. Let me just adjust my toolbars. Okay. Just going to label this as a green dotted or support dotted line. So if I line that up with the 50% Fibonacci retracement, we do see some instances where price has reacted on this level here. So we can see on 17th of May, not the strongest V-shaped bounce, but we do see price finding support here on 17th of May, running into resistance on 22nd of May, then again running into resistance on 13th of June before finally breaking higher. So we can argue that the 50% Fibonacci retracement level will offer some sort of support for the dollar index or for the euro. But of course, the major support below it is the second overlap support here that lines up with the 61.8% Fibonacci retracement. Okay, so we'll just keep 50 and 61. and we'll get rid of the others. Okay. Now to the upside, we can see that uh, there's no major real overlap, but if I were just to extend this a bit further, we can see that this level at 1.0911 acting as strong support back on 17th of April, and obviously giving way in 12th May, finding support again on 20th of June, and then obviously not at the exact level, but in this zone we have seen that the euro has run into resistance here since last week. So this is how we have chosen the first resistance, but of course uh we're actually going to place it a little bit higher, just at the swing low where the body of the candle, a swing high where the body of the candle is, and we're going to take that as our first resistance at 1.0918. Okay, now for the second resistance, we could also, yeah, we can see that uh if 1.0995 seems a bit far, right, it's almost 80 pips away, right? It's almost 80 pips away. You could also consider using this level here at 1.0965 as a resistance level as well. So I'm going to choose my dotted resistance line here. So you can see, you can argue that price ran into resistance here on 16th of June, and then again on 27th of June as well. So we had multiple instances. And if you look at my crosshairs as well, you could see that back in 25th of April and on 20th of April and also on 5th of May, price did find support at this level. So it indicates to us that this is a pretty significant area to take note of. And of course, the second resistance is just simply the swing high that was formed on 22nd of June. We don't see any other overlaps that it's forming with price action in the past. So we're just going to take it. Okay, but we do see it line up, sorry, with the 78.6% Fibonacci retracement here. So we've done the Fibonacci retracement from this swing high on 4th of May all the way down to the swing low on 31st of May. Naturally, right, as price comes up and breaks through levels, only 78.6 is valid. Okay, because price didn't close above it, the candles didn't close above it and start to retrace, we can still argue that 78.6% is still valid. All right, so this is the euro. Okay, now let's just slide on over to the pound. So similarly, we can see pound racing higher today. I'm not sure if there are any news for on the calendar for the UK. Like if I just let me just choose slightly include furthermore. I think there's only construction PMI data coming out of the UK today. Was it construction? Let's see. Yeah, we had construction, but the number was below 50. So it's contracting. It is lower than the forecast, lower than the previous month as well. So I don't think the the sharp jump in sterling pound is due to this data point. There's nothing else on the calendar. So yeah, it's definitely not an economic it's not an economic news event that has caused the pound to jump uh this afternoon. Right. Okay, so we can see it. It's clearly broke through the first resistance and is now testing the second resistance. Okay, so we can see that, okay, we've done the Fibonacci retracement here. We can probably, all right, let me see. We just pull up all the fibs first. Okay, on the retracement side, okay, 50 was a good level because it lined up with a nice overlap as well here. But of course, now that's broken through, we don't need 50, 61. We don't see any real nice overlaps. Neither do we see for 78.6. So I'm just going to delete the Fibonacci retracement on this part of the move. And here we have done previously Fibonacci retracement from the swing low on 29th of June to the swing high on 4th of July to find the support levels. But of course, now that price has broken through it, this retracement is no longer valid. Okay. Sorry, just trying to figure out if okay, sorry, just trying to see if there's any other attendees. All right, sorry. Okay, so in terms of resistance, so now naturally we can quickly update our chart. This will now be oopsie. This will now be our first resistance. Actually, when price breaks above our resistance, now this acts as our first support. Naturally, the first support becomes the second support. And this last one here obviously is no longer valid. All right. So in terms of the second resistance, I think that's pretty easy to find. It will just be the recent swing high. Okay, you can either choose the wick right at the top, but we prefer to use the body of the candle. So because if we do see price continuing to break higher, should let's say uh tomorrow if price breaks through and for some reason we see very strong demand for the pound, and if you're long on this pair, we would probably like to start exiting or taking profits at about 1.2828 rather than aiming for the absolute peak, right? There's no guarantee price could reach the absolute peak here again at 1.2850. So to be a bit, I guess, prudent, if we are continuing to be long the sterling pound, and should it break through the first resistance and makes a run towards 1.28 to 1.2830, this is the area where you would probably like to start uh taking some profits, like similarly to this here as well. So as price broke through what was previously the first resistance and raised higher, you should be looking to exit or take at least a partial profit or close half of your position at about 1.2770, or perhaps even slightly lower as well. At least it's good to book profits along the way and perhaps let the remainder of the position ride. And of course, uh, moving your stop loss to above up, moving it up to just above break even, or even switching it to a trailing stop loss as well. Okay, so this is the sterling pound. Um, Next, we have. All right, okay. Can finally see. Sorry, there's no name. Hi, Walter. All right. How are you? Yeah, I did realize there was. Yes, I didn't refresh. Okay, so do note if you have any requests that you would like, please drop your questions or requests in the chat box. It could be either the chat box or the Q&A box. All right. Okay, so do drop your requests here if you would like me to go through any of the forex pairs of gold or commodity. Please please do let me know, and I'll be more than happy to go through the analysis with you. All right. All right. Okay. Let's see. All right. Where were we? Okay, we are on the sterling pound. Right. Okay. Then okay, with that, we'll move on to let's see if there's any Fibonacci retracement here. Okay, we can use this swing high. And although it is not the best part of the move, because we see I don't really like this spike here, but if you look at Fibonacci, oh yeah, we did have it and we deleted it because there's nothing lined up. Okay, so let's just get rid of it. Okay. Okay, then we can move on to dollar yen. Right. So we saw equity markets in the US pull back yesterday as well, overnight. Sorry. Equity markets resumed trading yesterday after Independence Day, and they actually closed in the red with all the major indices, the Dow, S&P 500, and of course the Nasdaq as well. And usually when we see the VIX rising, right, the volatility index rising, typically we will also see strong demand or relatively strong demand for the Japanese yen, because we take note, right, that the Japanese yen acts as a safe haven currency. So in times of higher volatility like what we saw in equity markets yesterday, it is quite likely that we could see dollar yen fall as traders scramble for the Japanese yen. Right. Okay. So let's just zoom in here a little bit. So we can see dollar yen has been uh has been rising very strongly since the start of the year. Since mid-January, it bottomed in mid-January at about 127.50 before bouncing higher, going as high as 137.50, and then retracing back down to 130 before going on this long bullish climb for the last for 2 months now. Yeah, April, May, June, 3 months. Sorry, 3.5 months. Now we get probably starting to see price run out of steam a little bit, and where we see uh, an immediate major support level for dollar yen would be at 142.30, because we can see there's a nice overlap here. And if I were to extend it all the way back to September of 2022, uh, we could say that this level acted as a support back then, and then support again on 22nd. Of course, we see this big move down, but then you could say, you can argue as well that we had some resistance here back on 22nd of May, and then resistance on 19th of June as well before price finally broke through higher. So that is how we have identified the first support. And also we have done the Fibonacci retracement from this swing low on 24th of March, going up to 29th to the swing high on 29th of June. And we can see that we have a pretty decent support zone as well. You can see some price action here, bouncing off the 23.6% Fibonacci retracement in the past and going higher. So we can we have two factors contributing to this support zone. All right. Now to the downside, second support is found by using this overlap here at 138.08. Once again, you can see multiple instances where price has bounced off this level as a support and also running into resistance on 8th of March and 1st of May. Right. And if I were to zoom in a little bit here, recently you could argue as well that this level here is sort of like an intermediate resistance support level as well, because you can see price the dollar yen finding resistance here at 43.87, 143.87 on 23rd of June before finally breaking higher. And you could see after it did break higher, it acted as a pullback support on 28th of June before climbing higher. And then earlier this week, at the start of the week, we saw dollar yen drop as well, finding support just above this level before bouncing higher. So we can argue that 143.84 is a relatively strong support level as well, but we'll just include it as a intermediate support because it's not a real uh, significant level in terms of multiple overlaps, or it doesn't align with any Fibonacci retracement as well. Okay, then. Right. Okay. Then can we do? Okay. How do we find what's first resistance? Pretty easy, of course, is the swing high that also lines up well with the overlap here, stretching all the way back to 8th of September 2022. And of course, for the second resistance is found by by using a Fibonacci retracement from this swing high on October 2022 all the way to the swing low on January 23. And the overlap, there's no real overlap or a very good overlap, but oops, but I guess we can argue that price has reacted off 146.67 once or twice, and we can argue that because it lines up well with the 78.6% Fibonacci retracement level, that is why we have selected this as our second resistance, right? Just to make it more clearer, you can actually just leave it here, that's fine, but I'm just trying to highlight that we saw price form a nice V-shaped bounce here back in October, and another bounce here as well in November as well before finally breaking lower, right? Okay, so that's dollar yen. Yes, so we are seeing a big sell-off in the dollar index. So naturally, oh, it's even broken through this trend line as well. Okay, so naturally we're going to see dollar yen fall as well. And if it does convincingly break through this level at 143.84 convincingly, it's quite likely we can see it drift towards 143 as the US comes online. All right, welcome back, Walter. Yeah, please drop your questions and requests in the chat box. Yeah, so that I believe you should be able to uh, drop your questions in the chat box or in the Q&A box as well. Okay, so now we can look at gold. So naturally, if the dollar index is falling hard, as we can see here, naturally gold prices would tend to rise, right? So do take note, the value of the US dollar or the dollar index, I mean, which is the basket that tracks the value of the US dollar against its peers. If that is dropping, then gold prices are generally rising. So that's what we call a negative correlation. So when one uh, currency pair or one asset class drops and the other one rises, that's called a negative correlation, which is what we are seeing play out now. So okay, in terms of support levels for gold, we can see that the first support is found by using this overlap here at 1913.73. Price reacting off this level a few times as a resistance or support, and the second support as well at 1889.42 is found by using overlap here as well. We can see a couple of instances where price has reacted off this level. Now to the upside, we zoom in a little bit. We've done a Fibonacci retracement from this swing high on 16th of June to the swing low on 29th of June. And by pulling up the retracement levels, 50 and 78, okay, 50 is a much better level because we can see that there's a nice overlap slightly above it as well. So we have two factors contributing to this area as a significant resistance level. So not only that, I'm just going to highlight this zone. Right, okay. So this is the first major resistance zone for gold. Second resistance, yeah, it's in terms of Fibonacci retracement, we don't really see any nice overlaps, and the 78.6% retracement level doesn't line up with any other overlaps as well. But I guess for me, you could, okay, if I were to just pull it back all the way here, we can argue that uh, this is a pretty significant resistance level. Okay, I'm just going to pull it all the way back so that we can see clearly why this is the case. You can see price reacting off this level here on back in 3rd of April, and then finding support on 18th of May, breaking through, and of course finding support on 31st May, 1st June, and so on and so forth. So you can see that although there are many times that it has broken through the level, but just to get an idea previously that this was a pretty significant level. So that is why we've just kept it here. And the recent, not this is also not a swing high, but at this level, which is slightly above the 78.6% Fibonacci retracement. All right. Okay. I'm just going to run a poll. I'm coming close to the end of today's webinar. I'm just going to launch a poll as well while we cover the last few bits as we go. So really would appreciate if you could just give your feedback here with regards to today's webinar. Right. All right. Thank you very much, Walter. Okay. Otherwise, yes. Okay. Let's focus back on the technicals again. So we can see here we have a descending trend line as well, right? This descending trend line price has bounced off it a couple of times, and now it's testing it again. So we have three factors that contribute to a pretty significant area resistance area for gold. We have this a descending trend line. We have the 50% Fibonacci retracement level, and we have the overlap resistance level at 1932.10. Okay, so do take note of this level. So um, just to recap, what could cause gold prices to continue rising higher? That means dollar index has to be continuing to fall. So we do have key economic data coming up today, right? We have key economic data coming up today where we have ADP non-farm employment report coming out together with the unemployment claims. So for dollar index to continue falling, that means unemployment claims must be coming in higher than the forecast, while ADP non-farm employment change should be coming in lower than the forecast. So this if data prints as such, this means that the US labor market is starting to show signs of cracking. So that means the Federal Reserve does not need to be so aggressive. So this would result in further selling pressures in the US for the US dollar, which would then naturally drive down the dollar index. And of course, this would then push up the price of gold. So do take note of these key events that are coming up today. So just for those who are joining us, do take note that I'm on GMT time. So I'm currently at 10, well, about, yeah, 10:50 AM GMT. So at 12:15 PM GMT, we have non-farm payrolls in about less than 2 hours, about an hour and a half. Then we have unemployment claims as well, right? So we're going to see quite a strong potential catalyst for the dollar index, gold, and of course the other currency pairs as well. All right. Okay, thank you everyone for tuning in today. Hope this has been a great session. So do take note of the technical levels for or the resistance and support levels for gold. Do take note I'm on the 4-hour time frame. So these are the levels for gold. These are the levels for the dollar index, right? And we have the key levels for the euro and finally for the pound as well. All right. Okay. And that's all for today. Thank you. Thank you all for tuning in. And yeah, I'll catch all of you at the next session, all my colleagues as well. All right. Thank you, everyone. Have a great trading week.